Welcome back to another XRP update. Looking at the monthly time frame, freshening up the chart, and we can see there's been quite a nasty liquidation event the last couple of weeks. And looking at its history, it's one of the largest candles. Of course, there are many large candles, but it's one of the largest ones. Now, it's not a full candle, so it does show that there is a strong area of demand here where the bulls have stepped in to protect a key level of support. With the monthly closes holding around $2 a psychological level, we really need to see that to continue to be the case for this month's monthly close. So $2 has to hold up. We would like to see XRP actually recovering $2.50. Now, if you've been following along with my updates, you'd know that this is the neckline of a bullish pattern that we spotted, and it's actually used the entire year to create this bullish pattern. Hopefully, it's just retesting key levels and then recovering the neckline $2.50 around that general area over here. So as you can see on that liquidation event, it actually confirmed it as resistance, which I was warning of, and that going forward, this needs to hold as support. So there was a little bit of a scare on Friday last week, if you remember my video update then, that a lower low was formed, but Bitcoin actually reversed and recovered the lost support, and it also recovered the daily 200 EMA. So this gave altcoins relief rally, and that allowed XRP to recover that key level of support. So going forward, we really need to see on the daily time frame, daily candle closes, a weekly candle close. In fact, above this green area, you can see on the weekly time frame, we actually have the 55 weekly moving average. So important to reverse exactly from there. That's why we're creating this small but bullish structure, because we're seeing a lower low, and hopefully as long as this can now hold a support, you'll see your first higher low if we're just looking in this area. So this is showing signs of progression, changing the short-term trend here, the immediate short-term trend from lower lows into higher lows. So the beginning process of turning this around, creating an inverse head and shoulders pattern with the neckline suggested to be this red zone. Now that is the neckline of this inverse head and shoulders pattern, shoulder, head, shoulder, also the exact same as this over here. And we can see once it got up to the neckline, it broke out. So hopefully once it gets to the neckline, it breaks out. Now we can see there's some bearish crosses here, so it just makes sense to find resistance there and hopefully fall back to test this now as support, confirming that this was just a fake out, that was just a trap, and now that XRP could actually continue into the measured technical target, which would be $4 plus. Now if we head back over to the monthly time frame, if I were to remove these drawings and we focus on this red box, we now know and we can link it to that monthly time frames, the highest moving average of this EMA ribbon over here. So be incredible for the following days of this month, the ending days of this month, for XRP to have bounced from here and to recover that key $2.50 level, which also happens to be the neckline of that bullish inverse head and shoulders pattern. Now we need to discuss the potential targets. And I've of course shown that it's a $4 target out of the inverse head and shoulders over the past videos. But what I can do is, with this new liquidation event over the past weeks, we can adjust our fibs, because previously without that liquidation event, this was our largest correction from here to there. So I can place my fibs there. And it's giving me these technical targets between $4, $5, and maybe even as high as $9. But now with the new lower low, we have a low set, and as we're now bouncing back up, going into the end of the month, so not expecting it to test these lows this month, we can say that this move down is now completed in the short term. So I can place my fibs on that completed move down as a process back up has begun. We can see that on the daily time frame here, this move back up. Now heading back over, now staying on the daily time frame, we can view these targets. So it's changed from 412 to 487, and we actually have targets up as high as $15. Now just because these are listed targets, it does not necessarily mean that they will get met. I'm looking at this general area here of $4 to $6, maybe even as high as $7. We can actually look for some measured targets. So with this inverse head and shoulders down over here, you can now argue that when it got close to the target, it didn't actually meet the target, but it got close. And with this new liquidation event, you could argue that you've now got a new inverse head and shoulders forming with a brand new neckline going through those 2 points. So let me get that exactly and show you the measured target. This is new to the channel. We haven't discussed this brand new inverse head and shoulder. I don't think anyone else has either. Now, this target is going to be dependent on where it actually breaks out as it's currently there. That's the earliest. It's not going to pump up there within 1 day though. So the longer that it takes, the higher the target actually becomes. And you could argue that it makes more sense to be a bit more conservative if we have a significant Fibonacci level here. You could argue that maybe it just wicks up there, but finds that the daily or weekly or monthly candle closes remain under the 1618. So what I would say is that yes, we have a $7 plus target. You actually getting this measured move by looking at this year's range. And so this measured move would only is only valid once this neckline is broken, but it's actually thanks to the liquidation event that we're getting this new pattern. So although there was some short-term pain, you can argue it's created much higher price targets, as the previous inverse head and shoulders that we found here, this being the more conservative target, would only take it to 377, but we're in a bull cycle, so let's go a bit more aggressive. And that would take it, so as you see, $4. So that's why we had an expectation of $4 previously. And without this liquidation event, this was the Fibonacci that we had. And you can see nice confluence. So that is why my arguments with the new target is that be a bit more conservative. Maybe it does wick up there because there's this old Fibonacci there also. But looking for this to actually hold up as the resistance under the 1618, $6.86. So it's quite exciting if things can progress off of this low. We've seen that on the monthly time frame, we really need to see $2.50 recovered, and that this was a key monthly support, as well as the weekly time frame suggesting this being the 55 weekly. You really want this to hold up for the short to mid-term trend to continue bullish. You do have some bearish crosses now forming, so the bullish reversal has to recover that level. That is that neckline of the inverse head and shoulders pattern over here, the older one with the $4 target. So by recovering that, we know $4 is going to happen. $4 is above the neckline of the new macro inverse head and shoulders pattern. So in order to meet this target, and that target will be my expectation once the neckline of the pattern has been recovered, because that would then suggest this is a false move down. It's a trap, essentially a fake out. So we will go back on that bullish path, hit this target, and by that point, you find that XRP is above the neckline. And so at that point, targeting the 1618 here. Like, subscribe, comment, and share. If you wanted to learn my strategy, use the links down below. Take action on this 30% discount while it lasts until Friday the 7th of November. This can be applied to my Discord, ebook, or one-to-one mentorship plans. So check them out, and I'll see you over there.